this video, we will talk about how Fed Governor Michelle Bowman is fighting to protect banking rules from overhaul. Bowman is the community bank representative on the Fed's Board of Governors and a former banker herself. She has a unique perspective on the challenges and opportunities facing the banking industry, especially the small and medium-sized banks that serve local communities. Bowman was born in Hawaii and grew up in a military family. She graduated from the University of Kansas with a degree in advertising and journalism, and then earned a law degree from Washburn University. She started her career as an intern for Senator Bob Dole, and then worked as a counsel to 2 House committees. She also served in senior positions at the Federal Emergency Management Agency and the Department of Homeland Security under President George W. Bush. In 2010, Bowman returned to Kansas and joined Farmers and Drovers Bank, a family-owned bank that has been operating since she became vice president of the bank and gained first-hand experience in managing loans, deposits, compliance, and other aspects of banking operations. She also witnessed the impact of the financial crisis and the regulatory reforms that followed on community banks. In 2017, Bowman was appointed as the State Bank Commissioner of Kansas by Governor Sam Brownback. She oversaw the regulation and supervision of state-chartered banks and non-depository lenders in Kansas. She also advocated for policies that would support the safety and soundness of community banks and foster economic growth. In 2018, Bowman was nominated by President Donald Trump to fill a seat on the Federal Reserve Board of Governors that was reserved for someone with community banking experience. This seat was created by a 2015 law that aimed to increase the diversity of views on the board. Bowman was confirmed by the Senate in November 2018 and sworn in later that month. She was reappointed to the board in January 2020 for a term ending in as a Fed governor. Bowman has been vocal about the need to tailor banking regulations according to the size, complexity, and risk profile of different institutions. She has argued that community banks face disproportionate regulatory burdens that hamper their ability to serve their customers and compete with larger banks. She has also supported efforts to modernize the Community Reinvestment Act, which requires banks to lend to low and moderate income areas, and to streamline the reporting requirements for small banks. Bowman has also expressed her views on monetary policy, financial stability, digital currencies, and other topics related to the Fed's mandate. She has generally aligned with the majority of her colleagues on the board in supporting an accommodative stance of monetary policy amid the COVID-19 pandemic and its economic fallout. She has also emphasized the importance of maintaining a strong capital and liquidity framework for banks to ensure their resilience against shocks. Bowman is the first person to hold the community bank seat on the Fed's Board of Governors. She brings a wealth of experience and insight from her previous roles as a banker, a regulator, and a policymaker. She is committed to protecting the interests of community banks and their customers, while also fulfilling her responsibilities as a central banker. Michelle Bowman is a member of the Federal Reserve Board of Governors and the former State Bank Commissioner of Kansas. She is also a champion of community banks, which are vital for the economic growth and financial stability of rural and underserved areas. She believes that community banks face unique challenges and risks that require tailored regulation and supervision. That's why she supports targeted reforms to address specific problems that have arisen from the recent failures of 4 regional banks, including Silicon Valley Bank, but opposes radical changes to the overall regulatory framework for smaller and less complex banks. She argues that the current rules, which were enacted after the 2008 financial crisis, have been effective in strengthening the resilience and safety of community banks. She also points out that community banks have been instrumental in providing credit and relief to their customers during the COVID-19 pandemic. She warns that sweeping changes to the regulatory system could undermine the progress that has been made and expose community banks to greater risks and uncertainties. She advocates for a balanced and pragmatic approach that preserves the benefits of regulation while minimizing the costs and burdens for community banks. She says that her goal is to ensure that community banks can continue to serve their communities and support the economic recovery. She also hopes to foster a constructive dialogue between regulators and bankers to address emerging issues and challenges in the banking sector. Michelle Bowman is a member of the Federal Reserve Board of Governors and a former community banker. She knows the challenges that smaller banks face in complying with complex and costly regulations. She also knows the risks that these regulations pose to the diversity and stability of the banking system. That's why she warns that imposing overly complex and outsized regulatory requirements on smaller banks could lead to bank consolidation and potentially push banking activities outside of the regulated banking system, which would undermine the goals of the 2008 financial crisis reforms. Bank consolidation means that fewer banks would serve the needs of local communities and businesses, reducing competition and choice for consumers. It also means that more banking activities would be concentrated in a few large institutions, creating systemic risks and moral hazards. Pushing banking activities outside of the regulated banking system means that more financial intermediaries would operate in the shadows, without adequate supervision and transparency, creating opportunities for fraud and abuse. It also means that these intermediaries would not be subject to the same capital and liquidity standards as banks, making them more vulnerable to shocks and contagion. These are the scenarios that Bowman wants to avoid. She believes that smaller banks should be subject to simpler and more tailored regulations that reflect their size, risk profile, and business model. She argues that this would allow them to serve their customers better, support economic growth, and contribute to financial stability. She also believes that this would preserve the diversity and resilience of the banking system, which is essential for a healthy and dynamic economy.